and last day 3. Yes, February's just about done, guys. How does that happen? Day goes by, tick off another one. Simple as that. I've lost control here. Here we go. I think we'll be good. I hope you're well. I hope you had a wonderful weekend, and I'm looking forward to catching up with Ash very, very shortly. Of course, he'll be getting the late mail and potentially lining up a trade on the footsie or something else. And, of course, George will be joining us as well very, very shortly. First up, as always, let's have a look and see if we've got a London Open trade on gold. Those of you who are in this trade with me that we've been in for 2 weeks. 2 weeks, yeah, traded this bar here. I've moved my stop loss. If you're not in the Telegram group, obviously, you wouldn't be aware of that. My stop loss is now at 1820 from memory, 1820. I think I'm exiting here at 1800 or a little bit above 1800, maybe 1802, 1803. If we're fortunate enough to get there, I think that will be my exit point on gold, but that's not what we're talking about right now. We are on about the potential for the breakout. Thursday and Friday were pretty good for this one. Had you managed to trade both, you would have done very, very well out of that. Depending on, and we haven't settled on where we're getting out of these trades yet, of course. First resistance or support is probably the way to go on these. Depends a lot on what your risk is as to whether you're willing to take it to a level beyond that, I suppose. In this case, on Thursday, where's the bar? The low was here, right? That's the low. So you got triggered in here, never taken out. And you'd pretty much have to get out on that bar, I would have thought. I wasn't in front of the charts when that was happening, of course, so I don't know what happened. This one, of course, has gone a long, long way. So it's a little bit difficult to get a reliable exit point. And if you've got any ideas on that, guys, more than happy to hear them. But at the moment, we're looking at first resistance or support, that being a pivot or a trend line, horizontal level, whatever you want, whatever hard level of support or resistance, I think is the way to go. Now, as far as today is concerned, let's just tighten that up a bit. We have got, and those of you here for the first time, thank you for joining us. Wonderful to have you. What we're attempting to do here is get the breakout of Asia session as we go into London session. And we the first candle of Asia, which is the second bar of the day on an hourly chart. And that becomes the first of our time frames. And then we choose the range from that point, high, which is there now there, to the current candle, which will close in a minute or so, or less than a minute now. So the range is pretty clear. Here's the low, here's the high. We're in the middle. I like it when we're in the middle because it does give us plenty of room for the market to have a full start. So right now, we would have an entry long at 18, what's the high there? 1814. Yep, 1814, I believe. 1814, 18. We go to 1815 for our entry, which is ridiculous as far as a safe entry is concerned because of this untested daily pivot. In a downtrend, you'd be expecting something like this to happen, wouldn't you? Bounce off the daily pivot, not so much there, but there. Why would you want to trade into that? It'd be crazy, right? And we're not adding any filters to this. So if we actually go long here, I'd be most distressed. And what I'd actually look to do would be to close the trade if we don't go through there. Would I choose to use that as my exit level, I suppose, is the question. Well, I think the answer to that is if you're going to risk 77 pips or $7, are you going to reward yourself with one? Really? Is that worth taking at the end of the day? The other argument is there's nearly $8 available to the next level, which is these pivots here, or that horizontal level. So that's the questions really I have to ask myself when I'm taking these trades, and the answer is always going to be no. I'm not going to trade into that daily pivot untested. But that's adding filters, and I'm not adding filters here. What we're trying to establish is if it is worthwhile long term taking these breakout trades, and we're trying to trade the breakout of the range, right? Regardless of what's happened on the chart. And that's precisely why we're doing this. It's also precisely why we're trading it at a very, 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 very small risk. In my case, on this account, this is an ATW account, 0.03 of one lot. So, we're not going to do any damage if this does go off the daily pivot and south after having taken us in. What I would really prefer to do as a trader is see that daily pivot test and then try and enter short, because that's the way the market's moving. But anyway, I'm giving you a very, very long version of why I wouldn't take this trade if I was trading it as a intraday trader. But why I will take it, because we're testing the system. Got that out. So let's set the order. First one will be the buy stop, as I said, 0.03 of one lot, and the entry level will be 18.15. $18.15. Actually, I was listening to an interesting stat the other day that Paul Bottrell was advocating, and was all about best times to trade. I think the trend, actually, and Monday wasn't one of them. So maybe this works. Stop loss is 18.06, and take profit level we will nominate probably as just underneath the weekly pivot, which is around about, let's go with 18.20. Gives us $5. It's a bit better than half to one. Doesn't like that. Invalid stop loss will take profit. Oh, shouldn't put the 20 in. There we go. Much better. Now I'm getting confused with the other trade, but anyway, is what it is. The entry for the short will be the exact opposite of that. So let's go with that. Now, again, for those of you here for the first time, this is a one cancels the other trade. So if the buy is triggered, we would cancel the short. If the short is triggered, we would cancel the buy or the long. Only know 6 from memory, and stop loss 18.15. Take profit. Haven't worked it out yet. We'll deal with that in a bit. All right, there we go. So there's the potential for the breakouts. And as I say, if anybody's got any ideas on exit points for that, I'd be more than happy to entertain it. Right. Whilst we're on gold, I suppose I'll just repeat for those of you entering late that I am going to exit this trade that we've been in for a couple of weeks if we're fortunate enough to get to 18.03, which is about $10 below where we are now. Why? Well, because I think we're well and truly due for retracement, frankly, and the whole number 1800 just makes sense to me. It's also historically something that the market has moved on. So I want to get out before then, if possible. Righto, what else is happening? Updating you on what I've been doing. Firstly, and I'll probably have to make an apology here for those of you who are in the Telegram group. I had an order short on Euro Swissy last week, which didn't make the grade. We're trading it on the daily chart, trading this bar here. Didn't quite manage the TP1. Or was it this bar? I can't remember now. 2 weeks before. It was that one. And didn't quite make TP1, which was a little bit, I suppose, ambitious down here. And price reversed on that. And the stop loss eventually was taken on Euro Swissy. However, for my own trading on Thursday, I noticed the break and retest of this area here, this resistance trade line, and I did place an order long above that above that candle. That has now well truly taken the loss away from me on Euro Swissy, and my apologies that I didn't get it into the Telegram group, but I find it very, very difficult to give you or people who aren't, I suppose, willing to or ready to is probably the right word, to place a trade both long and short at the same time on the same currency. So, or the same currency pair. So I really hesitate if I do hedge or if I do place a second order. In this case, that was both of those combined. It was pretty much a hedge against the short, but it was also a setup for the long. So, you know, it's one in the same. Right now, I'm very, very close. In fact, I'm at that point where I would need to take some more profit on the long, which I will do very, very shortly. So, again, my apologies to those of you who aren't in that long on Euro Swissy. The other one, which I don't need to apologise for, thank goodness, is Aussie CAD. Now, Aussie CAD, we spoke about, it was the trade of the week last week at the end of the day. There was no reversal. There was no game changer bar on the weekly, but we noticed this market structure, which of course is a broadening pattern, bounced off the top of it underneath the, firstly a break of the resistance trade line, took the top of that broadening price pattern, came back underneath the trade line after two consolidating bars, then retested the level. That's an automatic setup for me. So entry underneath the bar, stop loss above. And the TP1 level was right there just above the 91 handle. I actually took an early take profit on that because 5 minutes before the close of the week, I like to adjust my orders and get them reasonably safe in the market. That's exactly what I did with this one. So the stop loss is now just above entry, and I have taken my first profit. What will I do now when it hits my first or initial take profit level is a very, very good question. I'll probably move my stops to entry at that point, which is right here, in the belief, I suppose, that price can go to my second take profit level, which is here, and the target, which is probably around about here somewhere. So Aussie CAD going okay. The third, it's Euro Swissy. So, right, you're up to date with all my trades at the moment. Right, as far as today, I don't even want to go to this chart because it terrifies me. And the reason it terrifies me is because I just don't want to miss out when price goes up to here. And I won't. It's just, you don't get the price that you want at the end of the day. I think I've been harping on about this for 3 weeks, maybe 4 weeks, maybe 2 months. I can't quite remember, but CAD Swissy has been on my radar for just so long. And the reason is pretty simple. We're at all-time lows here. And when we're at all-time lows, there's only one thing I'm thinking of, and that is trading off those levels to a higher level. Now, CAD Swissy, since here, right, and I'm on a weekly chart, we've been here forever and a day and in this range, and it just refuses to break out of there. And every time it comes to this level, I start to get nervous because I think a skyrock's going to light and it's just going to go straight up there. That won't happen, of course, and there'll be plenty of time to build this position if we can actually find a way to do it. Right now, we had a false break of this support trade line at pivot. Absolutely glorious. The only thing it didn't do was give me the setup that I want, which of course is a selling bar. Just didn't give it to me. Right now, we're back at this level again, and yeah, this is as solid a market structure as you'll probably find. And if I go to my little pen here, I can find my little pen here. Where are you? There is way up there. Again, we pointed this out ages and ages ago. Yeah, that's about as good as an ascending triangle as you're going to find. That doesn't mean, of course, that it's going to explode to the upside or anything like that. What it does mean is it's a market structure, full stop. And when I see a market structure, I'm absolutely ready to play ball whenever it gives me the signal as to what is going to happen next. And this was the absolute key to my mind as the way to play this, but it didn't give me the pullback bar, which is what I need. So I've got to wait again until the structure breaks again, this time to the upside probably, and comes back and retests the breakout level. When that happens, if that happens, I'll be fully aware and ready to trade that long. But at the moment, we're simply at a resistance level, and that's not for the first time in the last 2 months. It's for the probably umpteenth time in the last couple of months. So still waiting to get a clean entry on CAD Swiss. I did place another order today on what? EuroCAD. So EuroCAD has set up nicely for my mind, or to my mind, or to my eye, as a nice reversal bar here, following up this reversal bar here, which I couldn't trade because it was trading straight into the pivot there. So there was no room to take profit. Now, there's not much room to take profit either, but there's enough room if we get entered underneath that bar, which is pretty much where I've got my entry, underneath that bar, not that bar. So what I'm looking for here is a break lower with a pretty clear and obvious take profit level here. Why do I like this in directional bias terms? Well, I don't know that I've got a lot to look forward to here in terms of reward, unless we take out this level here, which is primarily, if you like, a potential inverted head and shoulders. But price has got to get down to there, in my humble opinion, probably this level here. And that's why I think this trade's worth taking. So my reasoning is, well, justified on that basis, I suppose. If you look at the top of this, it's also very toppy. You don't want to go through this level once, twice, 3, 4, 5, 6, 7, 8, 9 times in the last, month and a half. So I think the result of that, or the obvious conclusion I make to that, is that, okay, we're not going long, then potentially we're going short, mainly probably only to support in the first instance, obviously, and that's where I want to take profit. So I think EuroCAD's okay. The only thing I don't like about it on the weekly chart, it is a weekly game changer bar, of course, is that, sorry, that's the weekly. The daily is giving me a low test bar followed by a high test bar, something that I absolutely hate to trade. So that's why I went to the weekly primarily, and I'm trading on the week scenario. It's actually got, well, a spinning top at the end of the day, which is the next worst thing that I hate. But I think this is really toppy, and I think there's every chance we'll get down to that level, which will be okay. And then if it does reverse, we'll be on a good thing. I'll call it quits there, but there are a few things other than those. I've got Euro Pound on my watch list. I've got Pound Kiwi on my watch list, but they're a long way from entry. So we'll have a chat about them a little bit later. And I've got George in the room ready to go. George, I hope you got a little bit of time because I've chewed up a whole lot. Sorry about that. Ash, how you doing, bud?
Yeah, doing well, mate. Doing well. I've got a trade in the market, but I will talk about it after George. There's no rush, I don't think. FTSE looks pretty hot, but and there was an opportunity on the FTSE this morning, but it's not just there just yet. So I think I'm looking at a FTSE long. I don't know how you feel about that, George.
Let me just pop up my screen. All right, so I don't have the pauses yet, but
mate, sorry. I hate being the bloody director, producer, and
You're so good at it, though.
And the main actor as well.
Yeah, I'm a legend.
He's a man.
Is there only one of you today, George?
There's only one.
Is that right?
There's only one with me.
Okay, mate.
Yeah, when I'm not in active trades, it's usually just one of me.
Yeah, you got to.
I got news for you, George. There is only one of you. I can promise you that.
All right. So, Ash, just to your question, when we opened, I was hoping that we'll come back, maybe do a double bottom, here and give me an opportunity to jump in. After that wedge bottom, I was trying to see if I get an entry, but the first candle is kind of just taking the wind out of my sails. So I'm going to have to wait a little bit. And reason for that is, we're right up to the high of yesterday, and I don't want to buy up there. I'd rather have bought a little bit more. But if we do break out above that, then I'll have to look for a pullback to jump in. Now, when I get surprised by this, I have to kind of force myself to rethink and say, what else could the market do, in terms of higher probability? So if the bulls fail to break out above the high of yesterday, which also just happens to be at that 20 EMA, it's pretty flat on the 10 EMA on the daily trading range behavior. So the bulls have to get above the high of yesterday with strength. And if they do that, then, we all kind of say, oh, okay, bit of a sluggish bull breakout, but higher low double bottom. Let's see how high we can go. So that first candle was problematic for me, or in terms of I couldn't jump in anyway, because this earlier levels for the day. So I have to wait.
Yeah. So there was one little pullback, one there on the 5 minute. You can see the tail on the 5. It didn't come back quite far enough for me. I wanted it to come down just the second bar, second bar. I was considering, but it just didn't come that one. Yeah, I was looking at that as a potential entry, but I couldn't justify. I was hoping for it to rest, actually close at the low rather than kind of just give us a tail. But there's still an opportunity, hopefully, as you say, that resistance point. There's a good chance that'll hold up and push the market back down again, and maybe give us another chance to go long. Yeah.
So I mean, for me now, going long is down here. That's where I want to go long. Unless, even here, if we get a double bottom off, just testing the low of that first candle, then I can look to go long. However, if the bears decide to append the whole thing and they start to accelerate down, break the EMA, give us a double top, accelerate down again from there, then there's enough room to look for a lower high if it sets up, somewhere up here, while still waiting to go long. It's just as long as it doesn't go too deep. So even there, if I get a good enough structure, I would. But first price was going long, but I gotta wait. Once when it did that, I was saying, oh, okay, fantastic. Let's come down, test, and give us a chance. But it didn't, so I'm gonna have to wait a little bit.
Yeah, agreed, mate. Agreed. I'll tell you the other one. I don't know if you ever watch it, but the other one that I was really interested in this morning was the Australian market, the old Aussie 200. I don't know if it's got a nickname, Jeff.
The ASX.
ASX. Yep, the ASX. Yeah, I don't know if you ever looked at that, but there's
no E in the middle either.
I used to, but I don't. So if you've got it up, let's put it up and talk through it. There's a time I played that in the Aussie dollar, but now I don't.
Well, let me just bring up a chart here, and then I'll discuss the other trade that I'm looking at today. Well, I'm actually in, but we'll talk about it in a little while because the entry's not quite there. So ASX, just quickly get the screen. Few reasons I like this. I think the first thing is I really like this inverted head and shoulders, and it looks to me like it's got a little way to go before the neckline is hit. So we're not quite picking up on the right shoulder here, but it does look like we've broken through this level. A return to that level looks pretty strong as well. So we've got a pretty nice horizontal level right across here. So coming back into that area looks pretty good. That would also coincide with a trend line going up as well. Depending on when it comes down, it's got to come down pretty soon actually for us to have that. But what really interested me was that there was a release this morning, and it's this stuff here, which I will just share with you. This here, like, this starts to kind of like build the narrative of Aussie stocks. Business inventories were down, which is a good sign, because that means that they're potentially selling. Things are going out the door. Companies' gross operating profits 10.6% from minus 11.5%. So starting to stretch up there as well. Pre-tax profits at 22% as well. So decent numbers there on the companies, and that will draw me to the trade in a minute. I'll draw your eye to this as well, just to kind of, when I do talk about the trade. Core retail sales in New Zealand negative 1.3%, and retail sales negative 0.6% month over month, so quarter on quarter, and retail sales pretty damaging. So you put one against the other, that looks pretty good. If you go down the week, then the other thing that looks I think quite attractive for the Aussie is the GDP data. Now it is predicted to come in under expectation, but if we look at the GDP chart, we had a pretty decent hop last time, and it's been pretty steady right the way across. So if there's a number that I would have thought that would still be relatively positive, especially when you see those business numbers, it would suggest it might be the GDP data, and that pushes me towards a potential trade in the Aussie. And if we compare what we just saw with the retail sales of the Kiwi, that suggests to me Aussie Kiwi as a potential long. And the markets open up relatively, happy this morning as well. So if we then go back to this to start with, the company profits push me towards this. If you look at the Aussie dollar has been badly battered. And we know that there is a relationship between a country's currency and a country's index, adverse relationship. Usually if the currency is quite weak, that generally starts to encourage growth. So that's the reason I'm looking at that one. Now onto the currency, the trade that I've actually taken this morning, which isn't going well, which is why I said we got some time, is the Aussie Kiwi. And the Aussie Kiwi I like because it's a bit scruffy, but you kind of compare those two numbers, and it does draw us towards the Aussie Kiwi. And it's a bit scruffy, but I quite like this potential of an inverted head and shoulders down here. You've got left shoulder there, you got the head down here, possible right shoulder going on here. I wish I hadn't bought at the neckline, but it was starting to shape up, so I did it. I bought a bit early, but I think I'd probably end up getting something similar in price anyway if I was to buy this, because now you probably want it to break through, maybe retest a trend line, and it'll be somewhere in and around this area. Targets are currently up here, but this area here is going to be problematic. And if you put this onto a daily, this is why that area looks a little bit problematic. So the target is beyond the first area of potential resistance, but if you were to enter a little bit earlier, there's still a 1-to-1, if entering into this area here. So I'm looking at Aussie Kiwi long, but I do like the ASX 200 as well, mate. Well, I don't know what your analysis would look like on that, and I know you're looking at maybe shorter term timeframes, but as I say, I quite like this. If we look right across the board with this one, and check out what the price currently is. If we look down here, there's just this little tip here. It's a relatively good horizontal level here on the weekly that we could be bouncing up from. Looking at the daily, this bar would have to close like this, and it would look really attractive. This is back to the ASX 200. So that would look good. So maybe it's a trade for tomorrow. It's possible. As I say, the 4 hour kind of gives us more of a target than a setup. Maybe a target into this trend line area. But I do like the look of this inverted head and shoulders on the hourly. Might be a little bit longer before it really establishes itself. But this was the index I was watching today. But yeah, I suppose you look at the 5, would you, George? Are you checking it out? Are you on yours?
Actually, while you're doing that, George, just one thing with Aussie Kiwi.
Yeah. And,
recent history, when I say recent history, I think it's probably 10 years. Actually, I'll pull up a chart just so I've got some idea of what I'm talking about. About 10 years, I reckon.
Yeah.
Every time it's got above $2.10, sorry, $1.10.
Yeah.
It doesn't like it above there. And I know we've had a decent rally above that level. I think it went up to 115 back in early last year, maybe March, April last year, something like that.
Yeah.
But it's come back under that 110 handle again and kind of retesting it there. So I'm not saying it can't, definitely not saying it can't go above there, because it did recently, or certainly 7 or 8 months ago, but it doesn't seem to like it above 110. And I think I'm having a chat with Ainsley. I don't know, maybe it had too many to drink or something, but we were talking about Aussie and Kiwi, and I said, look, every time it gets to parity, I want to buy it, and every time it gets to 110, I want to sell it. And I think I've just adopted that thesis, I suppose. And of course, it doesn't always work, but that's kind of where I'm at with Aussie Kiwi. It doesn't want to get,
mate. I mean, my target is going to be below that 110, so I'm hoping that it will at least attempt
short term. I think no drama. Yeah.
But interesting. I mean, I don't know the Aussie Kiwi as a currency that well. I suppose I'm just going on what might be a driver this week. I mean, we're seeing.
We've got 5 amigos there. My God, I haven't seen 5 amigos for a while.
We got 1 here, 2, 3, 4, 5. Yeah. There are 5 amigos, and they I mean, the chart has definitely broken down. The price is definitely broken down. Haven't tested it yet, though. I don't know whether that might not be the line, and we need to do a little bit more.
Yep.
But that's pretty good. I mean, there's quite a lot of touches on that one. So we haven't tested this trend line, which would suggest that there might even be a little bit higher, to push into here. Definitely a counter trend trade, isn't it? No question, and it does kind of make it eminently more difficult to try and get a decent run out of this. And it might be we get up here and I get some signals and I say, you know what, let's cut this out. I mean, it won't be a 1-to-1, but it will be just underneath. So I might have to readjust my expectations. But it really does depend on what happens for the rest of the week. What's going to be released for the rest of the week, because the Kiwi and the Aussie have both been pretty badly suppressed. And they look like 2 of the weakest currencies in the market right now. But I see more problems with New Zealand, and of course we've got this whole building situation that's going to need to go on. Does that mean they're going to have to lower interest rates to kind of promote some growth in the country? But because of the disasters out there, I know Australia's had its own problems, but the most recent seems to have come from New Zealand.
Well, it's an interesting thing, isn't it, when you've got disasters and how the economy reacts to that. There's a thesis, of course, that that's going to promote a whole lot of activity in the building industry, no question.
Yeah.
And it's also got insurance implications, because everything that's been insured and will be paid out in New Zealand to New Zealand people would have been underwritten by some mega insurance company worldwide, right? Which would be in US dollar based, I would imagine. Well, that would have to be converted back to New Zealand dollars. Again, one would imagine.
Yeah, true enough.
I mean, I know economists, and I'm no expert in this field, but to me, logically, that should be a money flow in the direction of the Kiwi rather than the other way around. And what that amounts to in terms of, is that enough to move the currency or not, is another question that I can't answer. But when I look at that from a logical point of view, it speaks to me of, well, maybe not today, maybe not tomorrow, maybe not next week, maybe not next month, but as those insurance claims get ticked off the ledger, then I see money flow going to the Kiwi rather than away from.
Yeah, you might well be right, mate. Well, we'll see how that one shapes up. George, I've just noticed that you haven't got your dreadlocks anymore. What's happened?
Well, no. I have, and there's a whole process. If you ever look.
Oh, I see.
So I mean, I went to the lady who does my wife's hair. She's doing the dreadlocks. So she said we need to kind of put these cornrows in to try and force it to grow. Especially there's two patches. There's a patch at the back here, and another patch in the middle. So she's trying to get them to grow so that I don't have dreadlocks and bald patches. So
yeah.
This is in for up to end of March, and then hopefully, we'll have a nice even growth there. So it's part of the process. It changes your life. Now I gotta wear Durex at night, to stop messing up the pillows and all sorts of things.
Oh no! Oh yeah, that does sound like a bit of an ordeal.
It is. Just a quick one. You're talking about Aussie 200. This is an interesting parallel here that I've noticed. So I'm not looking at it actively, but if I look at this is on the daily time frame. And that tight trading range, that's just bare strength, right? And what I find interesting about that is, if I look at my good old favorite pair that I trade consistently, Hang Seng, we also had tight trading range, but the one on the Hang Seng, emerged out of completing this pattern, bear spike and the channel, and we got to the measured move of, so you get a bear spike, then the channel that follows. So we got to that, but we accelerated below that, and also below, this big round number here, 20,000, which on this chart is also 50% of last year's range and 50% of the all-time range. So that's a key level as far as Hang Seng. But the point is, out of a channel like this, when the channel ends, more often than not, you get a double bottom and an attempt to break above it and give the bulls a chance to create a high double bottom. But when you accelerate beneath it, then there is likely to be a bit more selling to come. So when I look at what we have here, it's quite interesting. There's some similarities. There was bear breakout, and there's a channel. So my early thoughts would be to see if the bears are strong enough, to continue selling, whether they do that today or next day, and if they're able to accelerate beneath the channel and maybe test, these lows here. So far it's a bearish market. If the bulls are going to reverse, they have to break out of the channel, of course. And if you get a breakout of the channel, the first attempt to come out of it is going to be met by the bears, and that might give us more selling. But I think there might be an opportunity for the bears, with all the other fundamentals you just spoken about, to accelerate down and then start to go to these levels. So
that's an amazing daily chart. That's like as smooth a curve as.
It is, isn't it?
I won't say what I was going to say, but it's a very smooth curve.
It's that'd be a nice walk, that, wouldn't it, Jeff?
That would be a lovely walk.
Get to the top of that hill and slide down again and move to the top of the next hill.
Little poke out the top there.
Yeah. It's it is a very smooth chart, and I've never really looked at the Aussie 200. I started looking a little bit last week because I thought, well, actually correlations between currencies do suggest that the Aussie 200 could actually do quite well considering how bad. It looks like it's there's a chance that the adverse correlation could actually push this currency up. And then seeing those business numbers, I mean, I'd say I've not been following the index at all, but seeing those business numbers come out as they have, very, very positive. And we've still got this situation where commodity prices are elevated. We see some of the PCE numbers, some of the CPI numbers, but they're still elevated, and they look like they might have got stuck as well, which does favour some of the Australian companies. So this is probably, this will probably remain on the watch list for a little while.
Yeah, I mean, gold, I presume, does have a fair bit of influence on that market, right? And if you look at gold as well, it's something I'm actively looking at.
I mean, I would have thought more copper. Copper would probably be the one that I would look for if I was looking at the Aussie.
For that,
iron ore,
coal, iron. I'm not actively trading the Aussie, but just wondering about commodities and whether this reflects something that's happening in the economy or not. But again, if you look at it, huge bear spike and channel. And, we come into that, whenever I see big round numbers, 1,800 on gold will be pretty interesting for commodity, smash through that. So, I mean, just going into the day, this bear candle, looking at the last three candles, I don't have an outside candle, bit of a doji. So, and I expect possibly a little bit more selling, on the day. So, I'm keeping my eye on gold to see. I mean, for the guys who are on the eastern side of the world, if you're trading this in the morning, you might have seen an opportunity just to test, after that wedge top, lower highs to sell off. But now I'm keen to see, what's going to happen here. We're going to create a double top, and if we do, how strong will be the acceleration down from it? And if that's strong, I'm going to look for a lower high to see if we can get through this and try and attack that 1,800 level on the daily.
I'd say that, gold is one of the most interesting markets, I think, because what we've seen over the last year is really quite an astonishing move in many markets where they've moved in one direction and then just completely reversed it and stayed reversed. Whereas gold has obviously sort of had that big move up. It's come down pretty hard, but I wonder whether this might be, breaking that pattern where things have just stayed low. And like oil, as an example, oil flew to the upside, come back down again, and it's stuck where it is. The dollar flung to the upside, come back down again. It's sort of stuck where it is, starting to build a bit of momentum now. But gold is the one that I wonder whether we might actually see that higher high and start to really stretch. And even though the retracement is deep, it's still in an uptrend on those longer term timeframes, and we see it go because there is, I think, a fundamental case to be made for gold because of the state of the planet and the conflicts that are going on between the East and the West, and how the currencies are going to get affected by that, particularly the dollar. And I think that we've been talking about it for quite some time, how there's a decent chance that the dollar does not emerge as the world's reserve currency over the next 5 years, which pushes us towards gold more than anything else. I think Bitcoin would certainly, there would be some people arguing for Bitcoin, but there's too much regulation that is going to have to take place in that market before we can have any enough confidence in it. But gold definitely is one to be watched, and I'm with you on this one. I'm really interested in seeing if we can get some upside in gold. And I think many people will be doing the same. I think a lot of people missed that first run and started thinking, you know, we still want it, and there's going to be a few people dipping their toes in it, as you say, around the 1800 level. The seasonal bias doesn't favor gold now for a few months. Now, that doesn't mean it's coming down. It could just mean that we go sideways or slightly higher. But the actual explosive move isn't really favored for a few months. We've got no COT data. There's been a cyber attack on the CFTC, so they've not released COT data now for a month. So we're waiting now, and they're talking about maybe 2-3 weeks away before we get.
That's interesting. That's really interesting, isn't it? And there's all sorts of conspiracy theories around that as well.
Yeah.
That I've noticed. They don't want that data released as, you know, one of the conspiracy theories, because they're just going to set it up behind the scenes, and then suddenly bang, away we go, and gold goes to 3,000, and all that sort of stuff.
But there's no COT data for anything. And as you say, it might be a cover for gold. I don't know, but there's no COT data for any of the markets. And if they just chosen gold, then I think I'd be a bit more suspicious. But there's no for oil, there's no for copper, there's no for anything. And that's a huge market to look at. The one thing that it might suggest is that where protection is coming into place right across the board with commodities, then the world might start to panic, understanding that there could be a genuine shortage of things that are essential. You know, forgetting gold, we're talking about wheat, we're talking about cotton and cocoa or coffee and all this sort of stuff. That there could be, if there was a conspiracy theory, then that would be where I'd be pushed towards, thinking, well, you know, is it because it could actually create some panic, not trading opportunities, but actually some genuine concern that the producers are purchasing long contracts way out in front because they can see a shortage and their commodity price flying.
Yeah, interesting.
Yeah. So gold's on my watch list as well, George. I've got a few down at the minute, but gold is definitely one of them.
Well, I mean, I think if you trade in higher time frames, your decision making process is different to what I'll be looking at. But if this turned up, this kind of structure turned up on the 5-minute time frame, and we still had that key level here, what would you do? I mean, if you're gonna buy, you're not gonna buy in the middle of the trading range. So just toss a coin and say, okay, buy, put the stop here, or sell and put the stop up here. Because. But if you try and say, okay, who has the higher chance of moving the market, you would probably think the bears, right? Because bulls came up here and the market has tried many times to break out, above whatever the 2079 level. Big bear acceleration, pull back, and now it's creating a bit of an outside candle. But it's good for the bears. The bears are strong. They need to break beneath this level, and then come down and maybe give a lower high. So, I mean, if I was seeing this on the 5-minute, my favors would be for the bears. And even if they fail to break beneath here strongly enough, and the bulls came back, I'm still, looking at all these double tops, lower highs as favoring the bears. So my bias, just if I was at the long-term time frame, that's it. But I mean, and when you come down here, you say to yourself, okay, spike channel, this is where the bears will get their satisfaction. If they were holding on to say, let's just get one more push down to this level, which is just peeping below the 1800 level, but then they're back into this range here, and in this range, the bulls can come back. This is ideal for the bulls to create a higher lower double bottom. So as you get down to the lower time frames, in a little bit more selling, make a bit of cash, but if the market bounces off, then you're gonna be thinking, okay, possible double bottom being created. Let's see if we break out of the channel, come back, higher low, and off the bulls go. So a little more activity for us, lower time from Forex, before you guys can jump in and say, hang on, there's a nice setup for me to go long. But I think there's a little bit more for the bears, And of course, the more I go down to where I trade, I mean, you really can see that if the bears set up, there will be enough room, to go all the way down here, be it today or tomorrow, before the bulls come back in. And just talking about that, we spoke about this earlier on. So again, I mean, this is good for the bears, but this 10 EMA that I use is an indicator of strength. It's pretty important when you get a huge bull breakout like that. And I gotta say to myself, why are the bears not able to give us a close beneath the 10 EMA? So is this just a breakout pullback and the bulls keep going up? So there's no way for me to jump in short, even if it just turns here until we get in a little bit more stronger structure. As far as buying, instead of buying down here, where would I buy up here? Well, I'm gonna have to see a breakout, pull back, testing that level, any kind of variation of double bottom. That's what I could buy going up. So might have to just be wringing my hands a little bit and waiting to see what's taking place. Just, I mean, a quick one. Earlier on, there's guys I know who are actively trading Hang Seng 50 with me. They would have had a few opportunities earlier on in the morning. We had the gap up, bear candle, second candle. And then when I saw that, I jumped into that trade. Can you believe it? As the tail was forming, hoping for the earth to fall. I mean, the bottom of the earth to open up, and we just continued to sell all the way down. Didn't happen. And as soon as it started turning, I got up a little bit of a loss. Jumped into that as well again, and just pointing out these big round numbers at the 20,000 round number. Jumped into that trade and opened for acceleration, didn't get it. So got out, bit of a loss again, jumped into that trade, had a wide stop this time and just waited, sold again here. It's not one of the trades that I tell, I encourage the guys to do, because you get into the close of the session. So you really got to be careful. But, I took a chance with it and got rewarded and got out just before the close. And now I'm still looking to go short. I mean, the market is closed for another 30 minutes or so.
Sorry to cut in, George. I've just got to pop out for one moment. I'll be back with you guys in a bit.
Sure.
Well, mate.
So that's lower high double top was good before we closed. And unless the market starts to trend down, and I've mentioned this to the guys, that second session is a little bit tricky to trade. Because, like now, it closes at 10:30, 30 minutes after the UK markets is open. Then we're gone for 45 minutes. And whenever the market is closed, who knows? It might just gap down or gap up. So unless, we had been in a huge bear trend where, your stop is far away, if you get a gap up, it's pretty safe. I'm really cautious about jumping into trades. But I keep the analysis going. So far, I'm happy with the lower high double top. I'm happy that we're staying beneath the 20,000 level. This blue line here is the bottom of that channel on the daily. Is that bottom there where we broke beneath it on Friday. We've come back into it, and I'm hoping that holds. So if the bears are coming beneath that, then there really is huge opportunity for more acceleration by the bears. I mean, will they get to the next big round number? Who knows? But it's not unreasonable to think like that, because the measured move of breaking below the range, the measured move of yesterday's range just takes us to that level. So I still think there is a higher probability of more selling coming through for us on this. So when it opens, if you're still up and about and you get a chance, have a look and see. I mean, in any ordinary situation, if there was no market closing here, this would be one of those where you say, see the pattern, double top, lower high. Let's look at it. bit of a problem with the outside candle, so you might have to wait a little bit, breakout, pullback. So even at the open, whether we gap up or gap down, I'm keen to see, are we going to sell beneath this bear channel line, come back, test it? And if we do, I mean, the stop is going to be here. That's a clean place for the first stop. And see if we get acceleration down. So that's my real early warning trade I'm looking at. I'm still keen. Say there's two: Hang Seng, gold. Gold so far. If we carry on just one more candle closing beneath that EMA, I'm fine with that. So if this candle closes down here, then I've got my double top pattern. Then I just want to pull back. And if I get a decent enough setup, I mean, this will be worthwhile, even at 0.25% to take it, put your stop up here and see if we get down here and accelerate down. And, the reason I'm thinking of that is if you look at these highs that we've had here, there's a possibility that these highs, no, I can't see my Zoom is all over the place. All right. There's a possibility that those highs could end up as the high of the day. Now, if that's going to end up as the high of the day, there's a chance that you might break beneath this level. So it would be worthwhile if it sets up clean enough or as near clean as possible, just put in 0.25%. Because if this ends up as the high of the day, then we might accelerate all the way down and get a chance, to put in some bit of higher risk, 0.51%, as it sets up going lower. Sorry, mate, that's what I got. Pretty keen
don't be sorry. If you're calling gold short, I'm more than happy. I've been in gold short for the last 2 weeks, and I'm absolutely committed to getting out of my position at 1800 or a little bit above the actually 1803. I'll probably miss my opportunity to do that in the near term, but hopefully it'll get back down there. I believe that 1800 will probably be broken, but I don't want to be in the retracement of it. It'll bounce. I've got little doubt about that. It'll bounce off 1800 in some way, shape, or form. But I think we've gone $50, nearly $60, and I'm more than happy with that since we got in the market. So I think I'll just take the profit at 1800 or 1803. I think is the level I want to get out at, and then look for another entry because I don't think the shorts are over yet.
Yeah, I mean that's let's just do this. So let's say we get that measured move. So if we get the setup and take a trade, you got to be aiming to say, let's see if we get a measured move of this little range here, and that takes you exactly to your 1800. So will we get there, or will the bulls come in? And if it starts to fail a little bit earlier, then you must just take profits. But I do think if it sets up, there is room to make some money. And then we wait for for the next setup when it pops up.
Exactly, the next setup, and that's what's on my mind with gold. And I'm hoping silver will duck down below about $19, so I can go and buy some more physical silver. Forget the markets. Are
you storing silver?
I'm trying to get it at the right price, George. Here in Australia, if it ducks below about $19, you can buy a kilo for less than $5,000. And that means it's not reportable here in Australia. Wow. So you can just tuck it away kind of stuff and nobody knows you've got it. You just go and dig a hole in the backyard or something. And I think, that's kind of the best thing you can do, frankly, at the moment is actually because, look, whatever happens, and I don't mean that this is necessarily a get-rich play, but it's certainly, to my mind, a storage of what you've already got play. I don't think it's going to lose value over time, whereas any currency you care to name at the moment has got question marks on it as far as I'm concerned. And, most other things around the world have got question marks on it as far as I'm concerned. And I think precious metals are going to come into their own at some stage. Obviously, gold and silver top that list, but there are others. I think commodities is an interesting field, and I've never really gone into it, frankly, but I'm really getting interested in it. I'm starting to learn a bit more about it. But yeah, I think the price of gold and gold's the standard, if you like, has been for a long, long time. So I get that, and I get that play. But I think silver's probably got a little more in that it's way cheaper to start with to actually buy it. And I think the potential for it to out pro rata perform gold is actually there. So yeah, to me, and I've been seeing this for a long, long time now. As I learn more about it, I really think it's a good play to go and buy some physical silver. But
it's a good play and it's a good asset.
Yeah, I can't see there being a massive loss on that, and that to me that's what I'm going on about it. But to me, it's a storage of what you've already got, and I think it's far better deployed. Your cash, for instance, is far better deployed in that area. And I'm not talking go and sell everything you've got and all the rest of it, but 10, 15, even 20% of your whatever you've got stashed away somewhere, or your portfolio in general, wouldn't hurt to have 10 to 20% of that stashed away in silver. I wouldn't have thought. Anyway, I'm not here to give financial advice. That's for sure. I'm not qualified to do that, although I have done all the courses. But I'm not a practicing financial advisor. It's just an idea I have, and it was not actually an idea I have. It's an idea that I've picked up through other sources. So that's kind of where I'm headed with that. That's why I want silver to get below $19, so we can actually get it for the right price. I'll put it that way.
Right, mate. I will follow your thoughts as we go along.
Happy days. All right, mate. So you're positioned, ready for gold to sell still?
Yeah, I'm just going to hang around for gold to see if we get
brilliant
lower high double top there. I'm going to wait to see what happens on UK 100. Strong double top acceleration by the bears, then I can look to sell. Or if nothing happens, if we just kind of trading range behavior all the way down here, I'll be looking to buy. Hang Seng 50, I'm going to wait for the market to open and see breakout pullback and look to short. So that's kind of S&P 500 is too early for me. I wait for the US markets to get closer.
Awesome, mate. If you're still around and you see that, give us a shout. If you see us set up there. Right, otherwise, I've got two other currencies that I didn't mention earlier that I want to have a look at. If that's okay with you, I will pitch the screen.
Please go ahead. Thanks, mate.
Cheers, mate. And pound Kiwi is one of them. No, I've got no idea why I've got my Aussie Kiwi chart up. There we go, pound Kiwi. If I look at the weekly chart on pound Kiwi, I'm looking at, and it's kind of weird. I reckon the amount of times I've looked at broadening price patterns over my trading career is maybe 5% or less. Yet I'm seeing them like they're running out of style, they're going out of fashion, which is amazing that they're just there at the moment. And every time I see one, I need to pay attention, because what I mean by that is, like all things, and sometimes you have to have an imagination when you're looking at chart patterns. But what I see right now on pound Kiwi is exactly that. I see a broadening price pattern where we're getting higher highs and lower lows. And when I see that, it's exactly the same as seeing a rectangle or a horizontal level each side of price. It means to me, if price is continuing to do the same thing off a particular level, then there's no reason why it won't continue to do that. Or every time it does approach those levels, it's time to pay attention, because it's going to do one of two things. It's going to do exactly the same as it did before, or it's going to do something different. Now, the key to actually succeeding off these chart patterns is recognizing what happens when price arrives there. So when I see price arrive at this point for the third time, and I'm expecting one of two things to happen. One would be that it's going to break out and continue going that way, or it's going to be a false break and it's going to go back towards the bottom of that called range, okay, that market structure. And it's the same if it was a rectangle, right? All these panels up here, that every time it reaches that horizontal level, it bounces back to here, and then it gets a tail and bounces back to that. It's exactly the same. So recognizing the market structure is the key. When you see a break and re-entry, like we're seeing here on the daily chart, it's even more dramatic on the 4-hour chart, where we have broken out, come back underneath and retested, or have we? This is again the trick that you need to have in your own mindset as to timing. If I look at the daily chart, which everyone will agree, longer, stronger, we all say that, right? Because it's true. What I'm seeing is a breakout and a re-entry below this level. And the current daily bar is probably going to be the one that tells me what happens next. If I see this close pretty much where it is right now, then to me that's a trade short in the morning, because we've had a false breakout of the market structure dictated by re-entry below it, that level, and then a retest. So I'd be more than happy to trade this short in the morning if it does set up. So if that candle was to close exactly as it is now, then I would trade that short tomorrow. And that's kind of the MO that I use for every single situation. Every single time I see price hit a level, whether it be horizontal, whether it be the top of a market, double top, it doesn't matter what it is. Every time I see that, the very first thing I'm looking for is the lower high, because what it really means is price is not willing to go above where it's already been at this point in time. That doesn't mean it won't go there eventually. It just means at this point in time, price is not willing to go beyond that level, or certainly this level. And that's why I'd be looking to trade pound Kiwi short in the morning on the daily chart if we get exactly the setup that I've got at the moment. The other one I wanted to look at, and we spoke about this last week, is euro pound. Euro pound on the bigger picture is very much a ranging pair. And if you can see what really is going on here and at this level, well, where that level's a real cloud of a price. It's the closes and the highs. What level do you want to call that? Well, it's somewhere between 90 cents and 93 or 94 cents. But the reality is every time we get to that level, price bounces off it. Are we there at the moment is the question. We're in an uptrend, right? There's no question about that. Yet what I see on the bigger picture is not an uptrend, it's a range. And I'm looking to trade that range. So the closer we get to the top of that range, exactly the same as I've just described on that broadening price pattern, what I'll be looking for is to trade this short off there somewhere with a signal that says, okay, it's a false break, or it's bounced and given me a lower high, whatever comes first, is the way you want to trade that. So at the moment, what we've got is a clear uptrend. And would I be expecting price to go to here? Probably yes, I would. At the moment, I'm getting a signal that says not yet. Do I want to go long? more, I want to go short. But when I put all of those ingredients together, and we've got this head and shoulders sitting here as well, I need to see the level, which is the neckline in my case. Let me use the one I've got there. Hang on 2 secs. So bring that down to there. If that's the head, then that's the left shoulder. Is this the right shoulder? Maybe it is. If that's the case, then that's the neckline. And that's the neckline for me. It is extremely odd shape. But what has happened is it's broken it and it's retested it. Now it's time to pay attention, because if we get above that level, then the head and shoulders, if you like, is violated for the time being, and we're looking to go long. And that long, again, should be up to this level, in my humble opinion, or certainly to these highs here. So whilst I'm ready to go, I need to have candles or price tell me exactly what happens next. And at this very moment, it's looking like you could sell there, get some profit in the bank here. But if as soon as this price gets above this level and then retests it, then exactly the opposite is the case for me. So yes, it's on my watch list, but I can't trade it at the moment until I get that clear signal. I think I've been through just about everything that is relevant to me at the moment. The one, and I continue to go here, is CAD Swiss, because I've been waiting on it and waiting on it and waiting on it. I think this is the 3rd or 4th week I've been looking for a setup here, and it just won't give it to me. Today could be the day where it actually breaks through these highs, and then tomorrow I'll be looking for it to come back and retest that, and that's when I would look to play it on Wednesday morning. If we do get that potential break and retest, we shall see. If price pulls back under here today, which is entirely possible, because we've done that 1, 2, 3, 4, however many times before, then I'm back to square one. I've got nothing to do. I have to wait it out. But super keen on that, because I think, going back to what I said before, these levels, these all-time levels, are there for a reason. It's because price does not want to go beyond them. And whenever I see that happen, I'm always looking for a bounce. Already had a bounce, but the bounce needs to be a bit stronger for mine. And the level that I see is up here somewhere, which means it's a long way from where we are, which means if I can get in here at a reasonable price, then, what have we got? 5,000 pips, something like that. That'll do. We can handle that. Right, mates. I think I'm done.
Cool. Good stuff.
I don't know there's any questions in the box. No, there aren't. And you guys, look, we really encourage you to participate in these things. It's one thing, Ash and myself and George telling you what we think, but we're here to share. So if you've got any ideas or anything you want clarified as to what we're looking at, then by all means do so.
Yeah, absolutely, mate. And also, I think we can cover some strategies, some other strategies as well, potentially. Certainly the Wave Rider, I know it well enough. So if there are, I won't speak about specific indicators, but we can certainly have a look at some currency pairs that you guys might be looking at and interested in, and see if we can get some clarity on what might be a better way to approach the triggers you're looking at. So yeah, we do want that, mate. We do want some participation from everybody, but as yet, people seem relatively comfortable. I don't know. Sometimes you just don't know what to ask.
I'm happy to say something.
That'd be great.
Yeah, if you don't mind.
That sounds like Catherine.
Yep, that is Catherine.
How you doing, mate?
I'm okay. I'm okay. Always a very interesting discussion, I think, from all of you guys, and for me, I just think I mean, it's nice to share, and I know you guys would appreciate that, but I just want you guys to know that actually just listening is very beneficial as well.
Oh, amazing.
And if anything, we're kind of for me, I think I'm more looking for advice and as much as kind of sharing perspective. But what I'm curious, and I know we're sort of up for time, but just very quickly, I'd be curious to get your views on just on the dollar. I joined a little bit late, so I don't know if this was covered. But for me, I thought it was interesting that especially dollar yen, because the new BOJ governor came out last Friday and basically said he's still going to be easy on policy. And then the inflation numbers and people react to that, and for the US came out on Friday night, and I saw dollar yen, and most dollar pairs basically just went up. And I thought that would be a confirmation of kind of like the reversal trend. But if I look at what's happening sort of this morning until so far, it's actually been a little bit of a consolidation, whereas I was expecting something to happen in the Asian session, because everything I just said happened on Friday night. So Asia has not reacted. So I'd be very curious as to sort of how you see the market is reacting, because it's actually contrary to kind of what I was expecting.
Yeah, I mean, do you want me to go first, Jeff?
Yes, mate, by all means.
So yeah, I think what you're anticipating is absolutely correct, but I think maybe the timing might be slightly off, because I mean, Jeff, you can see there that dollar yen may well have a little bit further to go to the upside. But I agree with you. I think it does also consolidate, and maybe a little bit higher. You can see that there's another little push to the upside, but I think it also consolidates, because what the market has said to this point is, we don't believe you, Jerome. You are going to lower interest rates because you're going to have to. And we've seen specifically the US housing market has been weak for many, many months, and they can't risk another kind of subprime mortgage scenario and a weak environment with the housing. So they're going to have to figure out how they can get the attempted soft landing, which is looking quite unlikely, with controlling inflation. And until the inflation numbers genuinely ease, and when I say genuinely ease, they've got to be under 4%, then we can't really expect Jerome and co really to do anything but at least keep interest rates elevated. They might not continue to raise them, but at least keep them elevated. Unless there is data which suggests that they're crushing the economy so badly that they're going to have to do something like, maybe pop down a 25 or 50 basis points. At this point, we haven't seen it. At this point, what we continue to see is jobs data's really, really positive. The labor market's really strong. CPI data is still showing elevated prices. The PMIs are showing growth in the economy. GDP is showing growth. So far, the balance favors the Fed. Now, what I suspect will happen is that we'll push to the upside with the dollar up to a point of potential resistance, which is just a little ways off, only a tiny bit. And then we consolidate there. And then we start to possibly see a rollout of slightly different data. Now, at this point, everybody's just working on the assumption that the Fed can't go any higher, but they've got no backup with any data. The data that right now suggests that they can stay where they are and they can go higher. So while that goes on, the dollar will fluctuate. Data comes out, it's strong, it booms to the upside. Data comes out, it's weak, it'll boom to the downside. So I think what we're now looking at is what's the next kind of step. And the next step, to my mind, is to get to March, which is only a few days away, get the next set of data and the next kind of rate decision, and then see what happens from there. But I don't think the dollar's that far away from turning, because they're near the closer they get to 5% interest rates, the closer they are to pausing or reversing. And the closer they are to pausing or reversing means that that's exactly what the market will do as well. Because it's unlikely they're going to go to 6 or 7. So at some point, the other currencies are going to have to catch them up, and the yen being one of them. It's going to have to catch it up, to a degree at some point. So I don't see the dollar getting back to all-time highs, because we're down here and we're at 5%. So they've got to be close to their highs. The Fed have got to be close to their active highs. So I think your analysis is right, but I think the timing has to be dependent on at least a weaker jobs number, or at least a significantly weaker CPI number, you know, at the minimum. And then you're looking at PMIs and all that sort of thing that could also promote some dollar downside. But the CPI and the labour market is the key. And until we see that start to you know, the labour market diminish or CPI diminish, I don't think the dollar's really going to start reversing. I think it's probably going to stay potentially in a bit of a range, or maybe ease a little bit higher. I don't think it's going to go too much higher though.
Yeah, that makes sense, and thanks for that, Ash. I think that adds a lot of flavor and context to my interpretation, because it's timing, isn't it? It's going to be the timing of it. You know, I think sort of, because we had the data on Monday, we can't expect it to reverse. Sorry, we had the data on Friday. We can't expect it to reverse on Monday. It's much more likely to go sideways Monday until we get sort of, you know, a bit more clarity. You know, and looking at the numbers this week, what have we got? I'll just double check what the kind of big number is going to be this week from the United States. What we got? So, I mean, pending home sales, that's going to be quite telling. You know, if we're still sort of seeing some weakness in that market, that is going to continue to make people think, okay, you know, they're going to be reversing relatively soon. And what else? ISM. So the ISM is also out this week. You know, that might sort of like drive the market a little bit. And then we got jobs data. Thursday's the day. And I suppose let's not forget that people are starting to ramp up, you know, sort of the rhetoric and activity on the election, right? So
yeah.
So I think I maybe just that as a background that will start coming into the maneuvers, you know, by banks and governments, you know.
Yeah, for sure. I mean, when it comes down to it, it will be laid bare in the numbers. And as I say, Thursday you've got jobless claims, and if that starts to come in weaker, then the dollar will start to show some signs of weakness. That's the real number. I think Thursday's the one. You got ISM as well. On Wednesday, Thursday, Friday. So we could see it turn, but we've got to wait for those numbers. The great thing is that the dollar's pushed high enough for us to have plenty of room to get involved in a reverse trend. You know, from here, we don't need to try and jump in at the highs. The charts will tell us, but I think they'll be, you know, the charts will certainly be led by the numbers.
Yeah. Okay. Cool. Appreciate that. Thank you.
No worries.
There you go. So your last statement, Ash, is exactly where I need to come in, because I don't give Continental what the fundamentals do, but what I will say is that the fundamentals will lead price to a previous market structure. That's what I'll say. And for right now, if you had fundamentals on Friday that have driven you to 105.29, which is where, well, it's today, isn't it? Is it today? No, it can't be today. That would be Friday's price, the dollar index. If it's driven you to that price, I would not be expecting that to go through that level on Monday, for sure.
Agreed.
You've got a support level here that's strong. You've got a resistance level here that's strong. So the only thing I would be looking for here, and you know, one of the first things I learned when I was trading, or when I began technical analysis, if you like, which was, you know, the first course I did 16 years ago, whatever it was that immediately after a strong rally, one or two things will happen. You'll get consolidation, and that's going to be 70, 80% more likely than anything else, or you'll get a partial reversal. So that's exactly what I would expect today. Now there are obviously probability is a wonderful thing, because 70% here means 30% in the opposite direction, right? Now, have you got the numbers sufficiently in your head to say, well, okay, we're at the 69.9% time. Now it's time for the 30% to kick in, or the 30.1% to kick in. I can't answer that question. So the only thing I can do is go on a probability factor that says 70%, then I've got to play that or not, do nothing. And that's what I would choose to do when prices rallied, sufficiently as it did on Friday. And especially when it's hit a resistance level, I certainly wouldn't be looking to enter the market at that point. Best case scenario for me, and this is the dollar index, not dollar yen, because it's my worst currency pair. I find it very, very difficult to read, even from a chart perspective, but certainly from a fundamental point of view. I'd, without any hesitation, say the very first thing I'd be looking for here is a US dollar flat line or slight retracement today. That's what I'd be looking for. So to me, it always comes down to, it doesn't matter what fundamentals have driven the market, they're going to take it to a horizontal level or a trend line level or a Fibonacci level, whatever it is, that's where they're going to take it, and they're going to stop for a period of time. And it's that period of time where you need to then make a decision as to, okay, what are the technicals now saying? What are the fundamentals saying? If that's the way you want to trade, consider, as the market will, when they reach those levels, what happens next. And that question I can't answer until price tells me what's going to happen next. And price will tell me, okay, it's going through here, it's going to come back and retest it. That's when I get interested. Or it's going to be a false break of that level. It's going to give me a lower high, and that's when I'll get interested. So until either of those things happen, I can't do anything. Just sit here and wait.
Cool. Thanks, Jeff.
You're welcome, Catherine. I know from a fundamental point of view that's of no help at all, but the fundamentals drive price to a technical level. That's the best.
I think that's
do.
a great help. I think that's a great help. I mean, I think my learning so far is that you've got to sort of look at both, and I think the balance is kind of up to, I think, personal preference or what's the right word, sort of inclination.
It's what works for you, mate. At the end of the day.
Yeah. The great thing about the fundamentals is that you don't even need to understand them. All you need to know is that there is a fundamental release coming, and then look at the chart to let you know how the market has interpreted it. So, understanding what the fundamentals are help if that's your strategy. But Jeff, you don't really sort of subscribe that much to what they mean, do you? You just need to know that they're there and they're driving it. So, what does the chart then say after they've driven it, and then you can take your position.
Yep.
So
100%.
I've got sorry, I don't know what the name of this person is, but it's 713016 is expecting the dollar to still be bullish this week because the figures released last week. It will depend on what happens Thursday, because the market is really expecting. They've been expecting for a long time. All that's really happened with the dollar is they couldn't ignore Jerome Powell anymore, because the data started to back up what he was saying all along, which is don't expect us to be loosening anytime soon. And then the data comes out and backs it up. So then we see a dollar explosion. All the market is waiting for is for him to be wrong, or him to be unjustified in suggesting that they can still go higher. And that's going to be just a set of weak numbers. And as soon as that comes out, things like gold look really interesting all of a sudden again. When it comes down to currencies, difficult play, because which one do you go for? Gold becomes a little bit simpler, I think.
Yeah. Keep selling it.
So anyway, mate, let's wrap it up and get moving. Thanks so much for the question, Catherine. Really appreciate that. We will be back Thursday. Something's going on Thursday. What's going on Thursday?
Don't know.
Oh, I know. Oh, we got a strike. I'll be in, mate. I'll be in. We got a teacher's strike, so I'm going to be running around with Molly as well. But it'll be all good. I'll be in, and then I'll run around with her after.
Okay. Well, she can be a guest.
She can be a guest
on Thursday. There you go.
Well, we have been trading together. We traded together last Friday. Not that she knows what's going on. I just showed her.
What is she now? 4?
No, she's 6.
6? My goodness.
She's 6. Yeah. She just knows that when I'm saying if I say, right, if it goes there, we're going to make money. If it goes there, we're going to lose money. She understands that, and when it starts to go in the right direction, she gets very excited. So that's as far as we got.
How are you going with the lyrics to the George, Jeff, and Ash show? The Trading Buddies trio.
I did wonder whether we could have if it's original, we surely can have a Trading Buddies intro song. I don't know why we can't do that.
No, but this is going to be a live appearance, right?
I know the live appearance, but they're going to want to know. They're going to be able to want to hear it regularly, the song regularly.
We can take an excerpt.
Intro music, yeah.
Right, we'll work on that.
All right, mate. All right, we'll push off.
I'm going to go.
Kevin, you're welcome.
We've got a meeting coming up.
Start recording, Jeff. Yeah, we will. You got a meeting coming up. We got to get out of here then. Have a great week, guys. Yep. The Aussie Kiwi, if anybody is interested in that trade, is going okay. It's going okay. We're just sort of like starting to push back up again. So looks like that inverted head and shoulders, right shoulder has held so far, mate. So let's hope that turns out to be a winner to get us moving on the week. Right, we will see you next Thursday. Yeah, go on, mate.
Yeah, gold hasn't triggered. It's right in the middle of the range, so I don't expect that it's going to produce too much, but we'll see. We'll keep it in there until it does break out, and hopefully it's at the downside so I can get out of my short. That'd be good. Close the trade. Have a great week, guys. Look forward to catching up on Thursday. Thank you for being our trading buddies. Thank you, Catherine, for the question. Please, guys, feel free to do the same anytime you wish. George, drop those dreadies, mate, and enjoy your week.
We'll catch up, gents, next week for sure.
Have a good one.
George.
All right.
Bye-bye for now.